If I had to start investing from zero today, I'd do this and avoid every mistake that cost me years. Step 1. Build your foundation. As someone who has spent years in the market, if I had to restart today, no money invested, no portfolio, nothing, just a clean slate, I would slow down first because most beginners rush and that's where they lose. Here's the truth. Investing doesn't start with stocks. It starts with stability. A lot of people skip this part. They see others making money, they feel behind, so they jump in fast. They invest money they can't afford to lose, and when the market drops, they panic. They sell, they quit. That's the cycle. So if I were starting again, I would fix 3 things first. Number 1, I would destroy high-interest debt. Credit cards, loans, anything draining me. Because earning 10% in the market means nothing if you're losing 25% in interest. That's not investing, that's leaking. Number 2, I would build a safety net. At least 3 to 6 months of expenses. Cash, accessible, no risk. Why? Because life happens, and when it does, you don't want to touch your investments. Number 3, I would understand my money. What comes in, what goes out, what I can actually invest monthly. No guessing, no pressure, just clarity. Because when your foundation is strong, you think clearly, you act calmly, and you stay consistent. That's how wealth begins, not with hype, but with control. And if you're serious about changing your financial life, make sure you subscribe to Rich Mind Finance and hit the notification bell so you never miss the strategies that can change everything. Step 2. Know exactly why you're investing. Most people invest blindly. No plan, no direction, just hope. That's dangerous because when things go wrong, they don't know what to do. So if I were starting again, I'd ask one simple question. Why am I investing? Not what, not how, why? Is it freedom? Early retirement? A house? Peace of mind? Because your goal decides everything. Your strategy, your risk, your patience. Without a goal, you'll quit too early. Now let's simplify it. There are 2 timelines, short-term and long-term. If you need money in less than 5 years, do not invest it. Keep it safe. Cash, savings. Because markets move up and down, and short-term drops can hurt. But if your goal is 5 years or more, now we're talking. That's where investing shines. That's where time works for you. Because over time, the market smooths out, growth compounds, and your money starts working harder than you do. Let me put it simply. Short-term needs certainty. Long-term rewards patience. Most people mix the two, and that's why they struggle. So be clear, be intentional, and once you know your why, everything becomes easier. You stop guessing, you stop reacting, you start building. And again, if you want to truly master this journey, subscribe to Rich Mind Finance because clarity is what separates beginners from people who actually win. Step 3. Keep it simple and start. This is where most people freeze. Too many options, too many opinions, too much information. So they do nothing. Days pass, weeks pass, still no action. But here's the truth. Starting is simple. You don't need perfection. You need movement. If I were beginning today, I would open an investment account. That's it. No overthinking, no endless research. Just start. Because once you begin, you're already ahead of most people. Now, yes, there are different types of accounts. Some give tax benefits, some are for retirement, some are flexible. But don't let that stop you. Pick one that fits your situation and move. If you're employed, take advantage of any employer contributions. That's free money. If you're on your own, find a simple long-term account. Focus on growth. And here's the key idea. The account matters, but your behavior matters more. Consistency beats complexity. Action beats hesitation. Most people fail here not because it's hard, but because they never begin. So remove the pressure. You don't need to be perfect. You don't need to know everything. You just need to start.
because once your money enters the market, you've crossed the hardest line, and from there, everything gets easier. Step 4. Small money, big results. You don't need a lot of money to start. That's a myth. What you need is consistency. Let's keep it simple. Imagine you invest a small amount every month. Nothing crazy, just steady. Over time, something powerful happens. Growth builds on growth. Returns build on returns. This is called compounding, and it changes everything. At first, it feels slow, almost invisible, but then it accelerates, faster, stronger, like a snowball rolling downhill. This is how wealth is built, not overnight, but over time. Most people miss this because they chase quick wins. They want fast money, so they jump in and jump out. They guess, they gamble, and they lose. But if I were starting again, I would ignore all that noise. I would invest regularly, every month, no matter what. Because consistency removes emotion, and emotion is the enemy of investors. You don't need to time the market. You don't need to predict anything. You just need to show up, again and again. That's it. Simple, but powerful. And over years, those small amounts turn into something massive. That's how you win. Quietly, patiently, consistently.
Step 5. Protect yourself and think long-term. Now, this is where real investors are made. Not when things are easy, but when things get uncomfortable. Because the market will drop. It always does. Prices will fall. Fear will rise. And most people will panic. They'll sell. They'll quit. They'll walk away. But that's the mistake. Because history shows one thing. The market recovers. Always. And it grows. Always. So if I were starting today, I would prepare for that mentally. I would expect volatility, not fear it. And I would protect myself the smart way, through diversification. That simply means don't put everything in one place. Spread your investments. Different sectors, different companies, different assets. So if one area struggles, others hold you up. Balance, that's the goal, not perfection. And then I would automate everything. Money goes in every month. No thinking, no hesitation, just a system. Because systems remove emotion, and emotion is the enemy. Finally, I would remind myself of one truth. This is a long game, not a quick win, not a shortcut, but a process. And if you stay in the game, you win. Simple as that. So stay patient, stay consistent, stay focused. And if you're serious about building real wealth, subscribe to Rich Mind Finance, hit the notification bell, and keep learning. Because the more you understand, the more confident you become. And confidence is what keeps you in the game long enough to change your life.